This is Bill Hornbarger, Chief Investment Officer at Benjamin F. Edwards, with three things to watch for the week of July 28, 2025. Well, we have a really busy week, and probably the highlight of the week, the most important event will be the Fed's two-day meeting, which will end on Wednesday. This will be the fifth meeting of the year, and it comes amidst a tremendous amount of political pressure and a lot of uncertainty about the economy and trade policy. Some of that's starting to clarify itself. Looking at the futures markets, interest rates are widely expected to remain unchanged. I think there's about a 3% chance of a quarter point cut this week. But the meeting will be closely watched to see what the comments are from the Fed. Are they going to continue with this very patient, data-dependent path that they've gone under? And I think the other thing to watch is, will there be any dissents? There is a growing vocal minority among the Fed that feel that they should be cutting interest rates. So those will be a couple of things that we'll watch very closely. A lot of economic data this week. We're going to get second quarter GDP on Wednesday, expected up 2.4%. That comes after, remember, we had a negative print in the first quarter, down 0.5%. Then we're going to see the Fed's favored measure of inflation, core personal consumption expenditures. That's expected to remain unchanged at 2.7%. So still a little bit higher than the Fed's target of 2%. And then on Friday, we'll get the July employment report. Non-farm payroll is expected to soften a little bit, up 109,000. That's a little lower than we've seen in recent months. And the unemployment rate up a tick at 4.2%. And then finally, earnings continue to roll in for the second quarter. We've had about a third of the S&P 500 reports so far. Earnings coming in a little bit better than expected. This will be a good week. We'll get four of the Magnificent Seven names. We'll see Meta, Microsoft, Apple, and Amazon. Looking at the numbers, about 80% of companies that have reported so far have reported a positive earnings surprise, and the aggregate surprise up about 6.3% in terms of the surprise itself. So again, earnings coming a little bit better than expected, which is another thing that's helping support the recent strength we've seen in the market.